Last night, a company Wall Street watches closely lost 17.5% in a single day. It's called Circle, the issuer of USDC, the second biggest stablecoin in the world. And the reason it crashed? Its own biggest partners just teamed up to build a coin to replace it. Here's what happened. On June 30th, a new outfit called Open Standard launched a rival stablecoin, Open USD. And look at who's behind it. More than 140 companies, names like Visa, Mastercard, Stripe, and BlackRock. And Circle's own partner, Coinbase. It's not one issuer, it's a consortium, governed by a board of partners. The way Visa and Mastercard are run, no single owner. And OpenUSD was designed to hit USDC exactly where it hurts. Free to mint, free to redeem. And the interest earned on the reserves? It gets shared with the partners. To see why that's dangerous, look at how Circle makes money. It's almost one thing. Circle takes the cash backing USDC, buys short-term US treasuries, and keeps the interest. That reserve income is 94 to 96% of everything Circle earns. So when OpenUSD says we'll give that interest back to the partners, it's aiming straight at the engine. And here's the part that stung the most. Circle's single biggest distributor is Coinbase. Coinbase keeps 100% of the reserve yield on USDC held on its platform, plus half of everything elsewhere. In 2024 alone, that was about $900 million paid to Coinbase. And that deal comes up for renewal this year. Now, Coinbase is standing on the other side inside Open USD. That's the signal the market reacted to. So, does Open USD kill USDC? That comes down to one question. Which of Circle's moats can this consortium actually copy? Split them into two layers. The first layer is institutional: compliance, custody, and exchange distribution. And here's the problem. The exact partners that give USDC those advantages are all in the Open USD camp. So that layer, it's genuinely being diluted. But the second layer is different. Sure, all call it the network layer. USDC is the number one collateral asset on the big DeFi lending platforms, Aave, Morpho, Compound, where it backs billions in loans. And it has deep liquidity across more than 30 blockchains. And moving the collateral that a whole lending market is built on isn't a press release. It means rewiring risk models, price oracles, and liquidations. That doesn't happen overnight. So the attack lands on the soft parts. The yield-hungry balances sitting on exchanges. The sticky parts, the coin wired into DeFi and spread across every chain, are the hardest to move. Now, before you write Circle off, 3 things that panic skipped. 1. Open USD is an announcement, not a product. It doesn't launch until the end of the year. And history is brutal here. PayPal and Paxos both launched stablecoins with huge names behind them, and neither moved the needle. A partner list is not adoption. 2. This wasn't just Open USD. The same day, Circle got dropped from 5 Russell growth indexes, which forces index funds to sell automatically. And some early investors were cashing out. 3 separate things hit at once. That's a repricing, not a business falling apart. USDC is still growing fast. Circulation up 28%, on-chain volume up 263%. 3. People worry that rate cuts would crush Circle. But the Fed is holding rates around 3.5%, and the market's actually leaning toward a hike this year. Higher for longer rates mean more interest on those reserves. That's a tailwind, not a threat. So here's the read. This crash was the market repricing an old known risk. That Circle leans almost entirely on one business model, not proof that the model broke. At about $15.5 billion, Circle now trades around 5 to 6 times sales. Wall Street targets run from $65 all the way up to $243. That's not a stable dividend stock. It's a high volatility bet on who owns the dollar of the internet. and there are exactly 2 things worth watching. 1. Whether Open USD turns that giant partner list into real usage after it launches. 2. How Circle's revenue split with Coinbase gets renegotiated this year. Everything else is noise. If this helped you understand the stablecoin war, subscribe. This is the kind of story we break down every week. And one line to be clear, this is analysis and education, not investment advice. Do your own research. See you next time.